Hey everyone, thank you very much for joining in. What we are going to do is that we are going to wait another 2 minutes, and then afterwards we are going to start this tax webinar. Hey, good afternoon, everyone. So we are going to get started. A few words about me. I'm Patrick. I've been doing the onboarding at Urban for the past 2.5 years. So if you started with us in the past 2.5 years, then most probably you met me at some point of your onboarding. As all of you who work on the platform are self-employed, we thought that it would be useful for you to have this tax webinar, especially that the self-assessment is coming up very soon, because the tax year is going to end on the 5th of April. We asked Sadler Advisory to do this webinar for you. The presenter is going to be John Sadler. What I would ask from everyone to do is to please keep yourself muted. And then if during the presentation you have any questions, then please just type that in the chat, because after the presentation, there will be a question and answer session. And I'm going to monitor the questions. And if there will be ones which are not going to be answered, then I will read those out loud to John. And then afterwards, if you still have any other questions, then you will have time to ask those from John. So then I'm going to ask John to introduce himself, and then he's going to do the presentation for you.
Hi there, can you hear me?
Yes, we can hear you.
That's great. Well, thanks for the invitation, Patrick, to speak to your physios today on a not abnormal London day, really. A bit of sun, a bit of grey, and a bit of rain. But here we are. You've given up your time at a lunchtime to talk about our favourite subject, which is, of course, tax. And it's timely because of, as Patrick said, the year end for the individual tax year is approaching, which is the 5th of April. And the webinar is really designed for those who are sole traders, basically, although there are different permutations in the way that people may deliver their services. Perhaps there's some limited companies, and if you do have questions about limited companies, then please don't hesitate to put those in the chat, and we can visit those at the end. In fact, one question might be, should I run as a sole trader or should I be self-employed? And we can discuss that at the end if you'd like. I'll kick off with the contents for the presentation. So we're going to talk about how to register for self-assessment. And for those of you who are in your first year of running your business, this will be applicable to you, and not for those who are already registered. We will then look at the three main taxes that will apply to your income and the different thresholds that of income that you need to earn before these various taxes apply to your income. We're going to deep dive into expenses by looking at generally what sort of expenses can be claimed. We'll continue with the types of specific expenses, and I've given a bit of detail to get your sort of creative juices flowing, as it were, when you're thinking about what can be claimed. Key dates and deadlines for you coming up in regards to registration, filing, and payment. We're going to talk a little bit about keeping records, some tips on how to make that easier for you, and the future state of self-employment, particularly around HMRC's requirements and the digitisation of the industry. So kicking off with registering for self-assessment, why do you need to? It would be if your income from self-employment exceeds £1,000. Just so you know, the period which we're referencing is the 6th of April 2022 until the 5th of April 2023. That's the individual tax year. So anyone earning more than £1,000 needs to register and report this to HMRC. The £1,000 is important because you can claim a trading allowance of £1,000. So if you are earning less than £1,000, then actually you don't need to report anything at all. We're going to assume for this presentation that everyone is earning more than £1,000. To register for self-assessment, you can go onto Google and just type in register for self-assessment HMRC, and you will find the most appropriate link in the Google search, and you will come to this page where it gives you three options to register for self-assessment. You would want to click on the register if you're self-employed. It's not the self-employed who are the only ones who file self-assessment tax returns. Other people who have other streams of income, such as dividend income, foreign income, trust distributions, they also need to file the self-assessment tax return. But for you particularly, you would need to register if you're self-employed, so that would also register you for your self-employed national insurance contributions, which we will go into in detail in this presentation. Register, you'll need your NI number, and most people have an NI number if they have ever worked before. So the first tax we will talk about is, I guess, the most obvious one, which is income tax. And you pay different rates of tax when you earn different levels of income. As you see on the table, the personal allowance, that is the first £12,570 that everyone in the UK can earn and pay 0% tax. There is an exception to that, of course, if you are earning over £100,000. The basic rate of tax is 20%. So any earnings between 12,570 and 5270 is taxed at 20%, but only the earnings between that band. It doesn't apply 20% to all of your earnings if you earn between that band. It's 0% on the first 12,570. It's then 20% on the amount between 12,570 and 5270. Then at £50,000 approximately, the rate goes up to 40%. And if you're lucky enough to be earning over 150,000, that tax rate is 45%. I would just note that there are different rates of tax for dividend income. So again, most of you are probably self-employed, but these percentages don't apply to those earning dividends from limited companies. So anything else to consider? If you are earning over £100,000, then you lose that personal allowance that I mentioned before. If you receive child benefit and you earn between £50,000 and £60,000, you may need to pay some of that back to HMRC. And lastly, if your income tax liability at the end of completing the self-assessment is greater than £1,000, then HMRC will require you to pay a payment on account, which is the technical term for a prepayment of next year's tax. So you go into a system whereby you're constantly prepaying next year's tax, and you have two amounts of payment on account each year. You, of course, get credited back in that next year for any payments on account that you've made. So it's like putting credit on your account, and you get that credit back again when you complete your self-assessment the next year. Type of tax, it has a different name, but it is basically a tax. Most of you, or people who are employed through employment, also pay national insurance, but it's called Class 1 national insurance. And to make things equitable across the board, across different types of earning capacities, different classes of national insurance are charged on the self-employed. So you won't pay any Class 2 or Class 4 national insurance if you're earning below 11,908. So I will just take you back to the previous slide where you don't pay any income tax before 12,570. For national insurance, you don't pay any if your earnings are below 11,908. So if your earnings are 11,908, you wouldn't pay any national insurance and you wouldn't pay any income tax. And then the national insurance is charged in the same way that income tax was, with a percentage if you earn between a certain amount. If you do work full-time and you're doing your physio as a side hustle, as they call it, you would already be paying a certain amount of Class 1 national insurance via your employment. So HMRC does allow relief on Class 4 national insurance to make sure that you're not paying Class 1 in your employment and Class 4. But it's important that you get your P60 from your employer at the end of the year, because that will have the relevant breakdown of your income in order to enter onto your self-assessment tax return in order to get the relief back. So fairly straightforward, albeit that it is another form of tax. Is there anything else to consider? So if your profits from self-employment are less than 6,396, you may not qualify for the state pension for that year. You need 10 qualifying years for the state pension, where 10 is the minimum and 35 years is the maximum. And the amount of state pension that you receive from the government on your retirement, even though it may be such a long way away, I think it's 68 at the moment, age 68, may want to make voluntary national insurance contributions in a particular year in order to add another qualifying year to your total. As I said previously, You can log into your government gateway and you can check how many qualifying years you have for national insurance. Also, just another thing to note is you can go back up to 6 years and opt to pay national insurance if you have any missing years. And it could have been if you missed a year when you didn't work, you finished an old job, did some study, didn't work at all. You perhaps didn't qualify for state pension. Perhaps it wasn't a qualifying year. So you can go back and fill in any gaps, although it does come at a cost which you would have to weigh up with the benefit. On to the last form of tax, or levy, which is applied, is student loans. And it's often forgotten because sometimes study did take place a long time ago and some people have never started to pay it back, although you may be receiving letters from the student loans company. So there are different types of student loans, more or less depending on where you did your study and when you did your study. So for Plan 1, you can earn up to $19,884 before any repayments are due. Plan 2, you can earn up to $27,295 before any repayments of student loan are required to be paid back. And the tax rate for those is 9%. And there are different thresholds and rates for postgraduate loans, as you can see on the sheet. Your plan type isn't anything that you can select. So how would you know your plan type? If you do have a student loan, you should be receiving annual statements from the student loan company. And if you are just not receiving those and you know you did have a student loan, perhaps you would need to get in touch with them and update your address. You may have moved and not received the annual statements. So in summary, before I move on to expenses, you can see that it's possible if you have a student loan and you are earning somewhere between £25,000 and £50,000 of profit on your self-employment, you have to pay income tax, national insurance, and student loan, which is pretty significant for someone at that level of earnings. So for that reason, it's important to be prepared so that you know how much you owe and when you owe it. On the flip side, it's possible that you're earning less than £11,000 or national insurance on that income. I mention that a self-assessment isn't required to report only your sole trader income. It's required to report all sources of income. So if you do have this income from self-employment, you've also got another job, full-time job, where you receive a monthly salary. Maybe you have a rental property where you earn income from that. You have to add them all up together and pay the appropriate amount of tax. Moving on to expenses. As a self-employed individual, the costs you incur to run your business can be claimed as an allowable expense for your business. So how is that used in calculating the profit? So the profit from self-employment simply is the income less allowable expenses. And we will go through on the next slide what constitutes an allowable expense typical types of allowable expenses and some typical types that are not allowable. Income tax, national insurance, and student loan are then charged on your total amounts from self-employment and other sources, which I mentioned. Self-employment, it's your responsibility to track your expenses. There is no one from HMRC, to be honest, actually looking through all of the detail that you submit, unless, of course, you are under an investigation, which is very rare. So it's really the responsibility of the self-employed person to track all of their expenses, include as many as possible, because if you can include as much as possible, it will reduce your profit from self-employment and therefore reduce your taxes. In terms of record keeping, HMRC recommends keeping receipts incurred through the business, and they can go back up to 7 years to look at any detail. So you do need a good record keeping system. Some people might consider that is a shoebox, and some people might consider that is a digital app. As I said, HMRC do not audit every single self-assessment, and it's called self-assessment for that reason. The individual self-assesses their profit and their tax, but they have to use due care and diligence, and so sometimes that might mean doing a lot of research or engaging with an accountant to help out. So this is the slide where I got a bit creative and I started to list out all sorts of different expenses that you might incur in running your business. And it's not all expenses that you might incur. And if it's not listed here, it doesn't mean that it's not allowable. I just thought, to the extent I was brainstorming for this particular presentation, that these mentions might help. So if you're traveling in and around London and you're using the underground or any other form of transport, then your train travel going from client to client would be allowable. Any products that you are taking along, buying products that you're using in any treatments, that would be an allowable deduction. Any costs of other materials, such as a massage table, rollers, anything like that, would be allowable as well. Other sorts of finance costs, like bank charges on your business bank account, interest expense on a loan that you might have taken out to invest in the business, that's also deductible. Charges from your accounting software app, if you have them. I've mentioned towels here for client treatments, but it's my understanding that you mainly are using clients' towels upon visiting them. Any paper towels or sanitary items that you buy, alcohol wipes, anything like that that you need for your business. Cleaning goods purchased to keep a workspace hygienic, maybe rubber gloves for hygiene purposes, dry cleaning towels for sanitary purposes, the costs of your email account, if you have one, and any advertising, marketing costs. Fees for an accountant themselves are deductible, which is great. Legal fees and any training costs that are related to your business. So on training, you wouldn't be able to, for example, do a Spanish course and claim that because it's not related to your business. Now, I haven't mentioned the disallowable items on here, but I can just mention some of them. So penalties are not allowable, and that can range from a parking penalty to a speeding penalty to an HMRC penalty for late filing, then they're not allowed. Client entertainment is also not allowed, which is the provision of food and drink to clients. And another one that people sometimes trip up on is when you buy clothes that you consider you only use in your business. HMRC is fairly strict on this, in that you might, for example, decide that you're going to visit all of your clients with white t-shirts, and you go to H&M and buy 5 white t-shirts, and you say, okay, they're only for business. But really, HMRC's view is that they are really personal in nature. They are not so specific that they can only be used in your business, and so it wouldn't be allowable. And I have clients coming to me often saying that they bought shoes and that the shoes should be allowable because they stand in them all day. You know, if they're a hairdresser and they need comfortable shoes, well, they're just not specific enough for HMRC to allow it. It's a different story if you put a logo on your shirt. So branded clothing is allowable. Continuing on with expenses, and some of you may use your motor vehicle when traveling around visiting clients. So they are allowed if they are wholly and exclusively for business use, but it doesn't include travel from home to a permanent workplace. If you have a full-time job, you can't claim the cost of travel from home to work. It's considered private. And then separately, any other private travel. So then the question is, how do we calculate this when you use your motor vehicle part of the time, not all of the time, for work? And there are 2 methods. There's a simplified method and there's an actual cost method. So simplified method is simply a flat rate deduction for the number of miles you travel relating to work. So it's 45p per mile for the first 10,000 miles and 25p per mile after that. I would really doubt if anyone in London is traveling more than 10,000 miles in a year for work. So it's probably going to be 45p per mile for most of you. Motorcycles have a different rate at 24p per mile. The actual cost method, you need to keep records of all specific costs relating to motor vehicles, to running your motor vehicle, or your fuel, your insurance, your vehicle tax, repairs and servicing, and so on. You keep a log of business miles travel, and you claim a relevant percentage of costs based on the percentage of miles you travel for business. So if you travel 10,000 miles in a year on your odometer, your car's odometer, and 1,000 of it is for business, then you would add up all your costs and claim 10% of that total for your business. And that would go into the motor vehicles expenses line in the self-assessment. So you need to keep a logbook for both methods. At this point in the year, as we're approaching 5th of April, if you've not kept a logbook, then I would suggest maybe doing a really good estimate on Excel, maybe listing down the different jobs you've done together with the different distances traveled in the car. And maybe you can work out how many miles you've traveled in a year, maybe since your last MOT, it was written down somewhere, but just keep some sort of evidence. The other thing is that HMRC will allow you to choose the method that works best for you, that gives you the biggest deduction. So obviously the simplified method takes less time to calculate, and the actual cost is more onerous, but the actual cost might give you a bigger deduction. But then you might work out the actual cost method and it might only be barely better than the simplified method, marginally better. In which case you'll say, okay, you know what, next year I'm going to save myself 3 hours and I don't really care for the actual cost. I'm just going with a simplified method next year. But I guess you'll never really know unless you try both and see what the calculation comes out as. So moving on to some key dates and deadlines. The current tax year ends the 5th of April, 2023. So again, if you haven't registered for this tax year, then you need to. But the deadline to do that is actually the 5th of October this year. So you have 9 months, 8 months to do that. But we suggest that you always get onto registration as early as possible. And the reason for that is that you won't be able to file your self-assessment until you've registered. The deadlines for paper tax returns, which honestly, I don't know anyone that files anything by paper. I've written there that accountants don't file them. I don't know anyone that does. But the deadline for paper is 31st of October. But if you do it online, the deadline is 31st of January 2024 next year. And the payment deadline for any tax outstanding is the 31st of January 2024 also. Do you remember when I mentioned that you may need to pay a prepayment of next year's tax if you have a liability of greater than £1,000? Well, that 50% is also due on the 31st of January 2024, and the second one will be due the 31st of July 2024. That's in relation to the tax for the year from the 6th of April 2023 to 5th of April 2024. So there are so many dates being mentioned here. Hopefully, if you watch back on this webinar, you'll be able to follow. But also most of the dates are written down on the presentation. Okay, talking about keeping records, some tips for you in terms of managing your records and the future changes within HMRC, and I guess professionalizing the self-assessment industry. So you should keep records of all expenses where possible, but of course for things like bank charges, then there is no record, there's no receipt other than the actual charge on the bank statement. So of course, in those circumstances, the bank statement would be fine. Cloud-based accounting app is a good idea. It's recommended if you want to be able to take a photo of a receipt when you're on the run and record it within the system. And there are various different types you can choose. Xero and QuickBooks are probably ones that you've heard before. Free Agent is another one. Crunch, Wave, they all have their different designs and charges and fee structures. But for most of them, you can integrate a bank account with it so that all of your transactions will show on the app. And then you can attach receipts to each transaction within the app. So this is not compulsory at the moment, but it probably will be in 2 years, which I'll move on to. But with an app, an accounting app, you can easily run profit and loss reports, and it may be able to give you more real-time information about what your tax liability might be or how your business is going at any point in time in the year. In terms of what app you should use, I guess I can give you one tip on a free combination, and it's quite specific, but Free Agent is an accounting software, and it's actually owned by NatWest Bank. And Free Agent offers their product to you for free if you have a NatWest or an RBS or a Metal account, any bank account from NatWest or Ulster if you're in Northern Ireland. It's on this call. So that is free, but then maybe you are thinking, well, I have to pay for the business bank account. They have an account called Metal, which is like NatWest's answer to or Monzo. It's an online type scenario. It's not what we would call a bricks and mortar or a high street bank. It's free at the moment. And I say at the moment only because you never know, but you could get a Metal bank account for free, and then you would be offered Free Agent for free. Moving on to tips. I would recommend people open a business bank account for their self-employment. And, it might cost £5 a month, £7 a month, maybe between 60 and £100 in a year. But you will really notice the benefits of doing this when you're collating all your records at the year end, because you'll know that every single transaction on that account is related to the business. And so if you need to keep a track of all your transactions, it's there in one bank account. You, of course, have to be really particular about what account you use for your business and what you don't. But I would imagine if you're using just a normal personal bank account at the moment for your self-employment, it's being mixed in with all sorts of transactions from your personal life, and coming to the end of the year, trying to understand what transactions are a business and what's not, it becomes really difficult. So if that year-end task takes you 6 hours to do, perhaps you would be better off paying for the business account and really saving yourself probably 5 of those 6 hours in having all that information in one bank account. You can then change all of your business-related direct debits to your business bank account, so you don't need to be collating expenses from other bank accounts at the year end. Another tip I would say is to prepare your self-assessment as early as possible after the 6th of April 2023. Be able to see what you owe as early as possible. Remember that the filing and payment deadline is the 31st of January 2024. That doesn't mean that you can't start calculating what that amount is as soon as possible. So you may want to get cracking on this self-assessment in April. You can work out what you owe. You can even file it, but you don't need to pay until 31st of January. There's no need to pay on the same day as filing, but as long as you do pay by the 31st of January. Bank accounts, there's no requirement from HMRC that you use a business bank account. You can use a personal one. So this tip here is really to maybe save you a bit of time at the year end. However, if you are going to use an accounting app, you would be better to use a business bank account that's solely for the app and solely for your business, because you wouldn't want to integrate a personal bank account into a banking app, because you would have so many personal transactions. It would really just be digitizing the frustrating process that you do at the year end, but every day, and you will be overwhelmed with the number of transactions you have to sift through. If you use a non-business bank account for your business, HMRC won't come running for you. They don't really care. But it's the banks themselves that monitor this. Sometimes they do look for regular transactions coming in, and they may or may not contact you to ask you if you're using a personal bank account for business. Of course, personal bank accounts are usually free, and for business, they charge. So that's why they monitor it. In terms of the future state of reporting and HMRC, there is a project called MTD for ITSA, which is Making Tax Digital for Income Tax Self-Assessment. And what that would require at that point is digital apps, digital record keeping, so always having a connection with a third-party evidence for your costs, such as an invoice, such as a receipt, and quarterly filings with HMRC, as well as the final self-assessment. So it's probably going to be the thing that causes the most amount of pain, because there would be deadlines for these, and then I'm sure there would be a grace period on penalties, but ultimately penalties will be applied for late filings. So that is coming. All of these tips that I provided would actually prepare you for that. And why not start now? And you might, recognize the benefits of having more information on your tax at the same time. This project from HMRC was originally planned to be implemented on the 5th of April, or rather on the 6th of April 2024, but it was delayed by 2 years simply because I think they just weren't ready. And notably, there were a lot of changes going through HMRC last year when the government was changing almost every 6 weeks. And every time the government changed, tax rates would change. So there was a lot going on last year. And it was at that point that HMRC announced a delay. But it is coming. Coming to the end of presentation. So hopefully there are some questions. I can see some in the chat. So a little bit about us. We're a chartered accounting firm based in London, and we have clients all around London in the UK and also internationally. So why do you need an accountant? Well, you don't, and HMRC doesn't say you need to, and you do have the ability to file online. But what I've found with most of my clients is that they start with our support for the annual filing, and then we're always there to support them for anything else they need during the year. So that might be they need a document certified, and it needs to be certified by a chartered accountant, and they come to us straight away. I had a client asking me to refer them for their gun license renewal. So that was probably the strangest thing I've been requested. And it does make me think, well, is this person of sound mind to have a gun? But also you might require some documents for a mortgage application or something like that, and you're in a hurry and you've already always got the accountant supporting you there. So that's generally what I find with clients, is that they come with for one reason, and that does sort of snowball into other things. So with further ado, Patrick, I'm going to give the floor to you, I guess, and you can read them out. I'm hoping I can answer all of them, but of course, if I can't, I can follow up with an email to you, which you can distribute to everyone.
Perfect. Thank you very much, John, for the presentation. I think it was quite clear, everything. But yeah, as you mentioned, there are some questions in the chat. So I'm going to read those out loud. And maybe I will just ask you if you can go back to the expenses slide. So it's going to be there because I think that's probably one of the most important things for everyone. So they can have a look at that while you are answering a couple of questions. So first of all, Shannon is asking if regarding national insurance. So her visa was sponsored for a visa that included covering Shannon's national insurance too. How is she going to handle this part in her self-assessment?
She was sponsored by a visa, and they would cover the class 2.
The partner's visa was also covering her national insurance contribution.
The sponsor of the visa was covering it?
Yes.
Yes, I would say that it would have to be calculated and paid. Was it the class 2 national insurance? Whichever one it was, I would say it would have to be calculated and paid. And then sort of a claim for reimbursement to be followed up later. I'm not aware of any exemptions within the self-assessment for relating to visa registration, visa provision.
I think Shannon is still on the call. Did this answer your question, Shannon? Yes, so Shannon says yes, so that is perfect. Then the next questions are from Jamie. So if someone is still on the call, they can, when I'm reading out their questions, they can unmute themselves and then they can add extra information if needed. So Jamie was first of all asking, with equipment that he bought in the previous tax year before registering for self-assessment, will these qualify for expenses in the next year?
There is, you can include pre-trade expenses. So I would say yes to this.
Great. And then if he's hiring a car for some jobs, will that qualify as a tax deductible expense?
Yes, I missed that. So hiring a car, maybe it's company, but they're dotted around on local streets, and you can just go up and enter a code and drive the car away. But yeah, that's allowable because you need it to get from job to job. So HMRC doesn't tell you how you should get from job to job, and if you want to spend a little bit more money to rent a car because it's easier than doing a long round trip on trains and buses, then that's fine.
Great. And then Jamie had a third question, which I'm not entirely sure I understand. So Jamie, if you are still on the call, could you please unmute yourself and then ask that question about the bookings before 6th of April this year? I'm not sure what is the exact question with that.
Hi there. It's actually Siobhan. I'm just using my partner's computer, hence the name Jamie. But thank you for answering those other questions, John. It was just in regards to if I'm literally just starting with Urban, so there's only a few bookings that are coming in before that 6th of April deadline. Is that still captured in technically the 22-23 year, or as it's so small, can it be put into the next year?
Yeah. One thing I forgot to mention actually is the basis of calculating profit. There's the cash approach and there's the accruals approach. So the cash approach is literally cash that's come in and out of your bank account within the period, and you just add up your profit on that basis. The accrual method is where you've delivered a service maybe on the 5th of April, but the customer doesn't pay until the next day, which would be in the next tax year. You can opt for a different form of calculating your profit. But generally, just to keep things simple with you all, I would say that cash in the period and cash out in the period is the way that you calculate your profit. That didn't quite answer your question, but what you are asking is if you've just got a few jobs between now and 5th of April and you earn, let's say, £500 from it, then that trading allowance would apply and you wouldn't need to report that 500. So it's essentially money that falls below to the £1,000 trading allowance.
Oh, yeah, that makes sense. Yeah.
So, yeah. And I guess while I'm here, I'll also mention that the trading allowance you can use if you can't really be bothered adding up all your expenses. So you can claim expenses of £1,000, which is the trading allowance, with no evidence. And you can use whichever approach to calculating expenses is best for you. So if it works for you to simply deduct £1,000 off your income and call that the profit, then you can. You can't use the trading allowance and actual costs. It's one or the other. But you can use the approach that suits you the most.
Thank you for that, John. The next question is if someone has clients pay them directly into their Sterling account, they do not create invoices or receipts for this, and this person is new to being self-employed, will a record of a bank transfer suffice for income?
Yes, that's fine. That's what HMRC is trying to, I guess, deal with in this project that I mentioned is kind of professionalizing the way people do it, in that if you did have customer client income, you would send them an invoice, and you can do that with apps. But of course, adding up the income from your bank account would be fine. You don't need to have sent them an invoice.
Great, thank you. And I think I can answer the next one. If someone started self-employment in July 2022 alongside with their part-time job, should they have submitted something by January 2023? But the answer should be as no, because the tax year is from the 6th of April 2022 to the 5th of April 2023.
Exactly.
That is perfect. Mary was asking, can we discuss, as you mentioned, whether we should apply for sole trader or self-employed?
Okay. For sole trader or limited company.
Yeah.
Yes. Limited companies can be beneficial sometimes because the corporation tax rate has been 19%. And when you extract dividends from a company, you pay dividend tax at 8.75%. My general rule of thumb is I probably wouldn't do it if your profit is less than £50,000. I would say if you are earning between £70,000 and £100,000 as a profit, then you should really consider it, because there are tax planning opportunities in the way that you run a limited company, because you can pay yourself a minor salary as a director, and then you can extract the profits from the company as dividends and pay a lower rate of tax, which is 8.75%. Class 2 and Class 4 national insurance. But the student loan rates do apply. And you would still need to file a self-assessment every year as an individual to record the dividend income. That's where it's reported. So general rule of thumb, I would say, probably don't bother under 50. Full-time job and you're doing this on the side, think about it, because it's a way of regulating your income personally in your own name by using the company. So there is no hard and fast rule, and sometimes it changes from industry to industry, because people sometimes like to appear that they are more professional than they are when they're starting up. Certainly I did that, and I registered for VAT before I needed to, so that people thought I was bigger than I was. But I would say things are going to be easier probably with self-assessment when you're earning below 50K.
Thank you for that. And there is one last question so far in the chat. So if someone is working from a rental flat, can they claim any house payments, for example, internet or I guess heating and stuff like that?
It depends if you're working from home. So if you are traveling around visiting clients at their homes, then you're not really using your home for work. I guess the only exception to this is if you use your home for a lot of admin work, or you are doing a lot of planning or advertising, marketing, or lots of, maybe building your brand from home. You would be able to calculate a certain amount of home expenses, but it would be a portion. It wouldn't be, it certainly wouldn't be more than 50% of it, because first and foremost, your home is needed to sleep and eat. But it would be a portion based on what area of the house you use and for what, fragment of the day you use it in relation to your business. So it's possible. But it's not a huge amount, but it can contribute.
Great. And then there are two other questions. So if someone works full-time elsewhere, but with Urban occasionally takes bookings, how do they do the tax return or claim expenses for car, for example, that they use for the main job as well, also for leisure, but also occasionally for Urban clients visits?
So you're driving to work, maybe for the full-time job, and then you're also visiting clients for the Urban job. Is that right? Is that how I understand it?
Yana is still on the call, so yeah, she says yes, exactly. That's how.
Yep. So anything from home to your full-time work is not allowable, but then anything between income source to income source is allowable. So you can drive to your full-time job in the morning, do that, and then drive and do a couple of clients in the evening. And you just need to track the travel that you go from one workplace, which includes your full-time work, to your other private clients, because you are, it's not personal at that point. It's related to the business. So yes, when traveling from work to work, and no when traveling from home to full-time work.
Thank you. And there is one question from Anton. It's related to VAT, so it's quite specific. He found something on our website. I presume it's an FAQ around VAT, which, yeah, he's asking if it's applies for him. So I would say, Anton, in the UK, as I think John just mentioned, that you only need to register for VAT if you earn above £85,000 per year. So if you earn below that, then that section doesn't really apply to you. If you earn above that amount yearly, then you would need to register for VAT. And then if in doubt about that, I think then probably you should consult HMRC or an accountant. Great. And then someone is asking, we have the postcodes on statements, so we will need to track mileage. What is exactly the question is if you need to track the mileage?
Yeah, no, I was just wondering, like, if you're driving, you know, you get the postcodes on the statements. Is that how we can just get the mileage on there to track it?
Yeah, I would say in any way possible that you can do it. Do that, whatever's the quickest and easiest way that gives you the best amount of accuracy. You need to be able to sort of stand up and defend it if anyone were to ever ask you. And
Yeah.
As I said, HMRC is not looking through every motor vehicle claim of that. There's something like 11 million people or something that submit self-assessments every year. And so you just need to do what works best for you and gives you a result that's as close to accurate as you can.
Okay, thank you.
Great. So Anna Maria pointed out that there are some questions on YouTube. So let me just quickly have a read through. So Anna Maria is asking, if she started working in January and she hasn't made yet £1,000 per, so it's not per month, the £1,000 is per year.
Right.
Does she need to register now before I make the money or after? So if you've been working as self-employed therapist, then you should sign up for self-assessment. And so the £1,000 allowance is for the full tax year. It's not per month.
That's right. So if you've earned more than £1,000 in your income since January, then I would suggest registering for self-assessment.
Great. And then there are some other questions here in YouTube. I think we already discussed what's the difference between being a sole trader or having your own limited liability company. So the video will be available on YouTube. So if you missed that part, then you will be able to have a look at that later on. And I think John already discussed like what are the advantages and disadvantages. Yeah, so that's related to that question. And then here in the chat, Jamie is asking, going back to a rental property, if you work with private clients from another property, for example, your family's home rather than your own.
And is the question, can you claim home expenses for somewhere that's not your own?
I presume that is a question. Yeah, Jamie says yes.
If you've paid the money, if you've contributed to the home office costs, then sure, you can rent your home off your mum and dad. It's still a cost to you, but you wouldn't claim it if you're not contributing to the home office costs, I guess, to the home costs. There's been a few questions about home costs, and we didn't include it just because a lot of people visit their clients at home, at the client's home. But there's a simplified method of calculating home expenses, and it's determined upon how many hours you're spending at home each month in relation to work. So I didn't include it on the presentation, but if you just Google simplified home office costs, HMRC, it will give you the calculation basis. And it's not hugely generous. It's something like £10 a month for working at home between a certain number of hours a month. And that's the minimum. And it goes up, but it doesn't go up a lot.
Great. And I think this is a very, very specific question. So we are trying to answer the most important questions. So with these very specific questions, I would again recommend to do some Googling on HMRC's website. They also have a free line to call, or again, consult an accountant. But there are two other questions, and then I think those are going to be the last ones that we are going to have time for. So one is traveling from home to my first client via public transportation, and from my last client back to my home via public transportation, does not count that as an expense? Does it count as going to work, as if I went to my office or to a permanent workplace? I was never clear about it.
Yeah, I would include going from home to the first job, because if that is your first and only job, then you would want to include it because it's necessarily incurred to work. So if you need to be at your first client, you need to get there somehow. So yes, I would. And I appreciate that I missed that step, that leg of the travel when I discussed it earlier.
Great. And the last question is related to this. If journey to client's house is, for example, 13 miles one way, can we claim for 26 miles petrol expenses or just 13?
Yes, the both ways.
Great. Then I think we only had time for this today. However, what we are going to do, because now we had 2 YouTube lives due to the technical issue, I do apologize for that for everyone, that we will try to edit it into one, and then we are going to upload that, and then later on we are going to send that out to you. And then with John, we are going to discuss if we could send out also the presentation to anyone who attended the webinar. So thank you again, John, for doing the presentation, and then hopefully it was useful for everyone.
Thank you. Thanks for the invitation, and have a good day, everyone.